Hi everyone, welcome back. I recently reviewed some economic reports for the month of March 2025, and it's packed with some important information about the Canadian economy, real estate market, as well as a few things about what's happening with the labor market, etc. I'm going to break it down in a few minutes so that way you get an understanding as to what's happening in the market, and then you have expert guidance and what to do next. Now, with regards to the reports, we are going to cover few areas. One is the macroeconomy, supply and demand dynamics, mortgage growth and renewals, impact of the tariffs and concerns. Of course, we need to talk about tariffs and also check on the consumer confidence and where the consumers are going in terms of what's happening in the market. Now, the first up, we are going to take a look at the economy, which focuses primarily on the inflation and the Bank of Canada's response to report highlights of the February Consumer Price Index, the CPI, which came in at 2.6 year over year. Now, what's more concerning is the core inflation over year, where the Bank of Canada prioritized to take a look. It came in at a spicy 2.8 year over year. So the monthly increase on the core CPI is really high. And this is the 3 month is the strongest since mid 2022. So this is a concern the Bank of Canada will be looking at going into the next months. Now, adding to this complexity, the CFIB, the business barometer for the month of March, shows nearly half of their members expect to rising prices at least by 5% in the next year, 1 year, pushing the average price expectations up. This presents a challenge to Bank of Canada as they face a a potential fallout from the tariff concerns. And then, despite the markets are pricing roughly 40% chance of a rate cut in the month of April. Though the report's authors believe that this might be low, the fundamental outlook suggests we are in a different world right now, making it return to zero most probably might not happen, but then the risk of inflation and also Bank of Canada's ability to stimulate the economy by cutting rates is going to be a big challenge going into the next few months. Next, we also start looking at the supply demand side of things. The key takeaway is that Canada's population growth slowed significantly in the last quarter, the weakest since 2017. Even though we had almost 750,000 people coming in the year 2024, we see a outright decline in the number of non-permanent residents coming in within the last 3 years. This decline is expected to continue due to the tightening work permits issuance and the study permit programs, and potentially leading to a negative population growth in the years to come in Canada. This would be another part the Bank of Canada will start looking at to see what's really going to happen. Now, in the rental market, there are concerns about a potential oversupply nationally. If you look at it, we see the purpose-built rental units under constructions across Canada, especially in Atlantic Canada, is oversupply, where the construction is very high, the population growth has stalled. Consequently, asking rents are declining across major metros like Toronto and Vancouver. Now, looking at the housing starts, where we look at the excluding rental property buildup, there's almost 4.3% month over month slip in the month of January. So year over year, this is down quite significantly, especially for the condos. Notably, the rental units starts accounted for a record 51% of the all starts last month, the highest in 35 years of data. Excluding any government-backed loans and overall starts, it's the lowest since 2009 for the single-family residential units. The reports also suggested that the rentals will likely be oversupplied, killing the rental demand in the long term, while the single homes in big metros might see a tightening in supply, and we might see this whole situation playing out again in prices going up in the next couple of years for the single family units, including the condos within the next couple of years. Now, the other third area that I want to cover today in our today's discussion is the mortgage growth and what's happening with the renewal. The report suggests the mortgage originations or mortgage requests or mortgage applications have gone up almost 100% year over year compared to last January. Now, fueled by new lending, renewals, and refinances, we are currently in the middle of a massive mortgage renewal wave where borrowers who locked into lower rates in the late part of 2020 and 2021 now looking to renew their mortgages and getting the payment increases around 35% more than what they used to. So most of the borrowers end up either refinancing or outright finding different ways to carry this extra payment, resulting in most of the time refinancing transactions. Now, from there, the interesting big shift is the variable rate mortgage used to be the real bad boy in mortgage borrowing is making a comeback. Now, almost nearly 40% of the mortgages that originated in the month of January were variable rate mortgages. Now, this increased demand for variable rates mortgages as well as consumer debt has our regulator a little bit uncomfortable looking at different ways to reduce the risk in the market. So last November, the OSFI is contemplating a new loan debt to uh, I think debt to income ratio, a DTI, to take out the stress test and replace with a different kind of measurement, potentially limiting the bank's lending for higher riskier clients. So we are waiting to see where the Austria is going to take this, and we'll keep you posted if there's something new happening in this area. The fourth point, that is the tariffs. Of course, this is something that on everybody's mind these days, and everybody's looking at what's going to happen with the tariffs and home sales and what's going to happen. In February, we saw the tariffs playing the first impact of we see home sales as well as the prices dropping. Seasonally adjusted home sales across the country plunged almost 9.8% month over month, and the largest decline since May 2022. Now, Ontario, which is in the crosshairs of this tariff war, saw the largest drop, where you might see partly due to weather, because we had a really bad weather in January and February, and plus also the tariffs, which is going to impact Ontario significantly higher compared to all the other provinces, saw a biggest sales slump in the month of February. Now, on the latest consumer report as to where the delinquencies are going and the mortgage delinquencies are concerned, Ontario also saw a largest uptick in the mortgage delinquencies in the year in the month of December. They saw significant month-over-month increase on mortgages in Ontario, which is kind of a concerning for any regulator in the market or a regulator in Canada trying to figure out what need to be done in terms of managing this delinquent wave also that is coming up along with the renewal wave. Now, also the new data from Bank of Canada shows that the share of Canadians behind at least one credit product surpassed Q1 2020 highs. However, the household net worth did hit a Q4 a higher level as well, driven by financial assets and a modest increase in real estate values, as well as the savings slightly going up. So even though the mortgages tend to still remain as a relatively lower increase in the delinquencies, we see lots of installment loans, primarily the non-auto loans have gone up the most. And this might actually be an opportunity for you to look at and talk to someone and see if it is, can you do something with that unsecured loan before you actually going and filing for delinquencies or paying or dropping a payment on an installment loan. So all in all, what does this mean? We are in a complex economic landscape persisting with inflation, slowing population growth, oversupplied rental market, shift in variable rate mortgages, cooling housing market in terms of building, and increasing consumer debt areas alongside alongside net worth increasing as well. So, as always, this is a complex situation. So if you need any help, always reach out to me. I'm always here to advise you, guide you, and have answer any questions you may have, and how you can understand better, or maybe figure out what need to be done in your specific situation.